to train you up. We on? This
Yes, we are live. We are live, people. All right. So, you know what I'm saying? I have a new segment for you. You know what I mean? So look, y'all. All right. I told you I was bringing y'all a financial literacy guru and I was bringing you a financial literacy course. All right. And I don't know if y'all ready for it, but we definitely ready for it. All right. He's here. He's in the building. Let me bring in, my brother, literally my brother, you know what I'm saying?
Yeah, yes,
The
sir.
same, the wonderful, Court Currency. You know what I'm saying?
Wonderful. Yeah, what's going on, everybody? What's up, good people? How's everybody doing today? All right, my name's Courtney Pennington, also known as Court Currency. Court Currency because I trade Forex. I've been in the Forex market for about 15 years. It's been a long time, a long journey. I know the ins and outs, the good and the bad. But I want to introduce it to new traders. You know, there's a lot of things about the Forex market that may discourage new traders. One of those things being technical analysis. One of the things that you have to be accustomed to doing in day trading is technical analysis. You know, I do all types of investments, like long-term investments in the stock market, stock options, and advanced options like credit spreads and covered calls, stuff like that. But the day trading is the riskiest form of trading because it's short term. The shorter term it is, the more risky it becomes. So you have to have things in place like called risk management. Okay, and I'm gonna get to that in a second on the charts as I introduce you to technical analysis. But we're at a day and age that we have to have multiple streams of income, so we can make the investments that we need in order to set up wealth. All right, and sometimes just the 9-to-5 job isn't enough. Okay, because as they say, it keeps you just over broke. Right. So this is very important. What's going on, y'all? Everybody's in here. Salute. Yeah. So when I first started, of course, I just wanted to make money online. So I was researching, and I found Forex, right? So me doing it on my own, looking at the charts, I didn't know anything about it. I put my money in it and I blew my account. Okay, but that's because I didn't know. So what I did, I invested in myself. Okay, and I paid a mentor to teach me about Forex. Okay, so in order for me to be profitable, it actually took 2 years. Okay, that long term would shake a lot of people out, but that 2 years of inconsistency was a lot because I quit. I quit for a little bit, took breaks. I didn't learn from my mistakes. The same things that I did to blow my account in the first place, I did over and over and over. It's important for you to learn from your mistakes. And when you listen to experienced people or read a book from experienced people, that gives you the chance to learn from these mistakes that other experienced people have done. But you have to take heed to it, especially in the financial markets, whether it be stock, commodities or Forex. Greed can take over. And especially day trading, it is like the casino. It can be like the casino. The Forex market is open 24 hours a day, 5 days a week, right? So you can make a little money on Monday, and then you're steady trying to trade all day, every day, that you can give all that money back that you made and then some. So you have to go through a certain set of parameters. And with that being said, I do have a free ebook available. I do have a free ebook available. If anybody is on TikTok, I am Court Currency. Check out the free ebook. It shows you patterns. It shows you some start like a little starter kit to get yourself started in forex. But it takes time. All right, you can't go into anything in any profession expecting to work real time out the gate. Okay, a doctor has many years of experience of teaching. A teacher has many years of teaching. Any profession, any profession where you're making money, big money, it takes even small money. Even if you're a cashier at McDonald's, you have to get trained first. Okay, so you cannot jump into it. That's the first misconception, that you're going to start making money after a month. It doesn't work that way, right? This day and age, one of the things I talk to a lot of the members in my group on Discord, and a lot of people who take part on my channel on TikTok are proprietary firms. Okay, so once you do the first goal of learning risk management, how to deal with your money on a daily basis, day trading. Now you can apply to proprietary firms to get capital. Okay, but it's very important for you to learn the risk management skills before you do that, because there's certain rules that apply. Okay, so they want you to be able to do things like on the first test, you have to make 8% on your account. Okay, so you make 8%. They give you 30 days to make 8% on your account. After you pass that first phase, just to make sure it's not a fluke, you got to make 5% on the second account. Okay, all while not losing 5% on any given day, or 10% overall. Okay, and you can be managing as much as $500,000. I know it sounds a little too good to be true, but they're only giving this money out to people who have efficient risk management. So if you don't prove that you're not a good trader, you won't get that money. You're just wasting your money doing the test. But that's what I train people to do: how to pass these exams. First, how to manage their own money, and then how to pass these exams to manage capital on their own. Okay, and it's real time. So I want to get into the charts a little bit. After that small introduction, I want to get into the charts a little bit to show you what I'm talking about, and I'll show you what I do every day. But first, is there anybody? Put a 1 in the chat if you heard of forex, if you participate in forex or any financial market, what have you. A lot of people that they may do options on Robinhood. They may play with stocks, especially cryptocurrency. Anybody out there? Maybe not. Okay. All right. So we're gonna get to the charts. Let me just adjust this. Excuse me for a second. All right. See you guys. Okay, guys. We are on, and let me flip this around. Sorry, 1 second, guys. I just have to flip this around. All right, not able to. All right, so I'll just do it this way. All right, everybody see the screen? Okay, so let me go to it. Let me go to a naked screen, and I will. Okay, so right here, this is a trading chart where we do technical analysis. All right, we do technical analysis on this chart, and that's where we see how what prices we can get into, and we base that off of the structure that price gives us, right? So these are called candlesticks, and all this is illustration of numbers of the prices. All right, but let's first get into what a candlestick is. All right, so let me blow this up a little bit. All right, so a candlestick. All right, you guys see that? All right, so this is a candlestick, okay, and it goes along with the corresponding time frame that you are on. So this is a 1 minute chart, okay. So each of these candles represent 1 minute, okay. This is all price fluctuation for the past 4 minutes, okay. So the red candles means that it after the candle started, it went down, right? And the green candles mean after price started, it went up in that corresponding minute. Okay. So what this means, it opened at the top of this block, okay? It went all the way as far as down as this little line here. We call that a wick. And then it closed here at the bottom of the block. All right. So the block represents open and close. The red means it went down, and the green means it went up. All right. So the block opened here, and there's a little wick at the top of this block. That means price went slightly up there, but it came all the way down here, and it closed at the bottom. Right. This is the beginning phase to learning technical analysis. Those of you who are not used to day trading and stuff like that, this is the beginning phase. As you see, how this illustrates price. Okay, this is like I said, is an illustration of price. Okay, instead of looking through bookkeeping showing you, okay, Apple was 105 on Monday. It went on Tuesday. It went all the way up to 150, and it came back down to 105 on Wednesday. Okay, like the charts are just easier illustration cases. So where you don't have to go through a book and looking at the numbers. The numbers are just illustrated here for you. Okay, so if it if it keeps, so if this was the 105 I spoke about, and then the candle will go up, saying it went up to 150. If I see it, if I see it come down here again, that structure that the price is telling me. Okay, it's telling me that it came back down to 105, and especially if there's a price rejection from that area, I can tell that just like on Tuesday when it went up to 150, and then it came back down the next day, maybe it's just come back down to retest the low to go up. And you base your trades off of this, okay? But these are the beginning steps. So this like I said, we're on a 1 minute chart, so this is a 1 minute candle. But if I'm on a 15-minute chart, this is a 15-minute candle. I mean, just so on and so forth. 30-minute candle, 1 hour candle. You have a 4-hour candle, daily, weekly, up to a monthly. Okay, so just easy and simple. The candle length of time is just the corresponding with the time frame that you are on. Okay, and you can choose the time frame up in the top left corner. This charting platform is called Trading View. Okay, so now that we have that, so now that you know where how these candles illustrate and show price, we can show how to take that information and like make zones. Okay, so I'll tell you a simple way to illustrate zone called support and resistance. Okay, after you learn about candle patterns, candle patterns, the next thing that you learn about is support and resistance. And this is a little introduction. I don't want to go too fast. I know, you know, this whole thing may look funny to you, but it'll make sense in a minute. Okay, and with time of you doing it over and over, it'll become second nature, right? So we're looking at this screen here. Now we are on a 30-minute chart. Okay, so let's go to a 4-hour chart. All right, we're on the 4-hour chart, and we see that price has come up here. Okay, it's come up here numerous times and been rejected here. Okay, so this is our resistance. Okay, because it is resisting price from going through that level. All right, very important, very important. This is you look at how price develops over time. Okay, because price reacts off of historic price. All right. If I zoom in this first area when that price got rejected. Okay. Right. Price first got rejected here. So let me do another replay where you don't see those other candles. Okay. So right here. Now each of these candles are 4 hours. Okay. Now on the higher the time frame, the more valid these rejection zones become. Okay. So like on a 1 minute chart, it's not going to be as valid as a 4-hour chart. Okay, because while this rejection happened on December 13th, the next rejection would happen like a whole week after, on the 22nd. Okay, so like if price gets rejected twice within 1 week, it got rejected a whole week later. That tells you like this is a strong level. Okay, so that's one of the importance of resistance and support zones. And I say support is just like the same thing, drawing the same zone underneath. Okay, so first you see price gets rejected here, all right, to go down, but then it comes back in that area and gets rejected again. All right, now this is an example of areas where you could get into trades. All right, you get into trades. Of course, with you don't put all your money on the line, but we'll get into that on another day. But you don't put all of your money on the line. Usually, you put up like 0.5%, 1%, because just like you can make good money in forex market, especially it being a leveraged asset, where you're not just putting up, say like you're not just putting up $1,000, and when it moves $5, you make $5. No. When it moves something like $5 to $10, I mean, you can make a few $100s. So you get into this trade, and then you want to choose an area where in case price goes against you. So I would, in an area like this, being that it got rejected here before and it went down, I believe it will be rejected here again. Okay, so here's an example of me getting into this trade, putting my stop loss. What a stop loss is, once you enter a trade, it gets you out of the trade in case it goes against you. Because if this trade was to go against me and continue to go up and up and up, I'll lose all my money in my account. Instead, I have this stop loss here just in case it goes against me. No, even though you have like great analysis, the area has been rejected multiple times over and over and over again. It can still, no one knows exactly what price is doing. We see history. History tends to repeat itself, but sometimes history does something different. Okay, so, but like I said, we're going with probability here. It's more highly probable for price to be rejected once again. Okay, so we put our stop loss here, so we get out of that trade. It'll automatically get us out of that trade if it goes against us, and then we will put just like a stop loss is here to exit the trade once it goes against us. a take profit here, so it automatically takes you out of the trade in the money. Though, of course, that's the opposite of this. It takes you out of the trade in the money. So just like you get out of the trade if it goes against you, it takes you out of the trade at major levels, like important levels where price stands. Okay, so you have important price levels here. So this would be a good area to take profit, right? So we will do that, and as it goes down, it hits our price target. Okay, because this was a high. You don't want to just and this is day trading. You know what I'm saying? You want to kind of get in and out of the market in one day. You don't want to. The point isn't to hold it for weeks at a time, months at a time. It's not like the stock market. With stocks, you're paying for something that's tangible. You're owning a piece of a company, a share of an actual company. With Forex, it's more of just a bet whether price is going to go up and down. Kind of like a stock option, but at least with stock options, you own the right to buy. You know what I'm saying? So you own the contract that gives you the right to buy or sell 100 shares of a particular contract. Okay. So anyway, you learned about what the candles mean. Okay. It is the illustration of price. You have the blocks that, once again, on the corresponding time frame, this being a 4-hour time frame, each of these candles represent price movement within 4 hours. Okay. The green candles, like I said, as price moving up. The red candles obviously is price moving down. Okay. And the wicks just show you how far price have gotten. Okay, even though price started at the end of this block, ended at the end of this block, these wicks show you that price went a little lower, and it did go a little higher into this resistance zone, but then got rejected and closed right at the top of this candle. Okay. Now we use this all over. All right. And when you have many different pairs to choose from. Okay, so that's what Forex is. Forex is playing two different currency pairs against each other, and basically what that means is like just the operation, the wellness of two different economies. Okay, this currency pair is the British pound versus the U.S. dollar. Okay, so the strength of each currency is fighting against each other, where the numbers change instantaneously. It's always moving up and down, always up and down. Yes, a dollar is worth a dollar, but in comparison to all the other currencies, it fluctuates. Okay, and once again, this is what illustrates that. When you start trading Forex, it is best for you to just focus on 1 to 3 pairs. Okay. Myself, I only trade one. I got familiar with that. It's actually an index instead of a pair. It's the Dow Jones. Okay, I trade the Dow Jones, in a lot of these brokerages. Brokerages are just an account that holds your money that allows it to be tradable. Okay, just like a stock brokerage. In order to trade on Robinhood, in order to trade stock, I choose a brokerage, a stock brokerage. One is Robinhood. You have Charles Schwab. Okay, you have TD Ameritrade. Those are brokerages. They just hold your money just like a bank account. But the only difference, a bank account, you cannot use that money straight out of your bank account on the trading platform. You have to transfer that to a brokerage account. Okay, so you choose a Forex broker, which is of course different than a bank account or a stock broker. You need a Forex broker to invest that money. Okay, and once you want that, you choose like just 1 to 3 currency pairs to start to trade, because you'll see tendencies with it. You see how it moves. You see the range of movement. Oh, like this currency pair, it usually moves 100 pips. And also, pips are the units of movement universally used in the forex market. Um, just like so, if Tesla went up $5 in the stock market, you can say either $5 in the stock market or 5 points. You know, if you were trading if you're trading commodities or futures, you would say ticks. All right, but in the forex market, this moves in pips. All right, so that's all measured over here at the bottom. It shows you how many pips it moves, and those values are all on the right side of the screen. Okay, um, so let's further go over this level and why this level built strength. Okay, so we're going further. So price went down here, but then it came back up. Replay. All right, there it goes. Start coming back up, and then it comes back into that level once again. Okay, so and this is far out. So the last time it hit the level on December 13th. All right, then the following week it hits it on December 22nd. So after that, just zooming out, it goes down here. So for days and days and days, it goes all the way down here. All right, and then it starts to come back up. Where? Right back to that resistance zone. Okay, so being that it was respected here and here, once again, that'd be a great time to get into a sell. All right, so just like last time when we sold it, we have to put a stop loss. All right, a stop loss that once again gets you out of that trade, just in case the price goes against you. Okay, and you don't want to on each trade. You don't want to risk a large amount of money on your account. You want to make sure you want to prepare yourself for the losses, prepare for the worst. So like on each and every trade, you're putting this stop loss that I talked about. Okay, just as you're putting a take profit as well, because you want to get out of the trade if it goes against you, and when it goes in your favor, you have to get out somewhere. So you want to choose a high probability area so you can take profit as it goes in your favor. And and just because you have a take profit don't mean that you have to hold it all the way. You can close out anyway. You see that it's having trouble getting to your take profit, it's stuttering a little bit. Instead of giving all your money back, while you were waiting at the screen, you can close out the trade on your own. But once again, you see how once again this level is respected. But now it starts going up some more. Boom, boom, boom. And it's hitting that level multiple times. So this is what I mean about price stuttering. Okay, so and once again, this is the 4 hour time frame. So it didn't breach the stop loss yet, right? But it's having trouble getting to your take profit. All right, so like you can watch it, especially on the lower time frames, that'll show you to get out of the trade. In fact, on this area where it started to stutter. So let's go to the 1 minute time frame. That's the 5 minutes. Let's go to 5 minute time frame. So we analyzed this on the higher time frame, the 4 hour, and then we go down to the 5 minute. The 5 minute alerts you more on where prices starting to turn around. Okay, so it goes down some, but then as you see it coming up and making a trend of higher highs. Okay, but what I mean by higher highs, I'll take the paintbrush here. Price doesn't go all the way up, and it doesn't just go straight down, right? What price does, if it's going down, it'll go. It's like a wave pattern, right? A wave pattern. Okay, so when I say lower lows and lower highs, so this being a high, right? It goes down to make a low, and then this is a lower high. It's a lower high because this high is lower than this. Okay, comes down, make another low. It's a lower low than that, a lower high than this, so far and so forth, right? Lower low, lower low, lower low, lower high than this, lower high, lower high. Okay, so when you're at your trading desk, you want to take heed to this. So you enter the trade at the top of this zone for a sell. Granted that their price is going to go down, and you have a target further down here. But as I said, it's not always going to make it to your target. So taking knowledge of that, you are taking heed to this on the lower time frame. This is the 5-minute time frame. So if as long as it's continue to make lower lows, you're in good shape. But now when it stops making lower lows and starts to curl around and make highs, you can start to take profit. So it doesn't escape you. So this is fine. It made a low. Okay, so it made a low. Now it made a high that may make you wary, but then it makes a low that's equal to these, right? Comes up a little bit. All right, this is, instead of making a higher high, it made a lower high, and then it continued down. So that's a good sign. All right. Going further down, that's good. Let's give you an example of how you get out of this trade manually. All right, further on. And now once it starts making higher highs, this is the time to start. This is your signal to start getting out of this trade. Okay. And sorry, I brought the take profit up by mistake. Okay. But so you don't wait for price to go all the way back to your entry. You can manually close out this trade. Okay. And that's what I like about day trading. Day trading within a session. Okay. So if I'm trading like the London markets, I'll be getting up early, like 3:30 to 6 o'clock. That's the time that I'm watching the markets. But if I'm watching the New York market, it's called New York session, I'm watching the charts the most volatile period. That's why I can take advantage of the price movement, getting in and out of a trade. I'll be looking at that from 8 to 11. Okay, because the market opens, the actual New York Stock Exchange opens at 9:30, but sometimes the move already begins to happen as early as 8 o'clock. That's why, I lengthened it up to 8 o'clock. All right. So you're not here looking at the charts all day because, it allows you to look at the market every day. And like there's many nuances to get into, but, I don't want to go too deep, not as deeper than I already have, but I don't want to get too deep and cloud your mind with too much already. But any of you guys that are interested in the forex market, I try to break it down as simple as I can, okay, so people can learn. But even with that being said, it takes time for you to be profitable in day trading, okay? Because along with an accurate strategy, you need to develop good money management skills in trading, okay? Which includes how much you're risking on each trade, how to calculate that, where your proper stop losses should be that get you out of the trade, how to manage your trade once you are in it, okay, and also risk to reward, how much you're risking against how much you plan to make, okay, and your which makes your winners far outweigh your losers, right? I can trade. I can take 4 trades, and it'll be like a 1 to 5 risk reward. So I'm losing 1 unit, but I'm risking $100 to make $500. Okay, for example. So if I lose, if I take 4 trades and I lose 3 of them, I lost $300. But on the fourth trade, it's a 1 to 5, so I make $500 on the 4th trade. Even though I only won 25%, I'm still up on the day $200. Okay, if you understand what I'm saying. All right. So those are it's a skill set, because when you come to the screen, with the ability to make money, at the drop of a hat, it's easy to just put up much more money than you have than you need to. Like, that's called over leveraging. Okay, and along with over leveraging, traders tend to over trading all day. So you choose your window. Stay disciplined to trade in your trading window. Stay disciplined to trade a certain, just a minuscule leverage where a loss is not going to, ruin your account. Your account needs to be able to maintain, losses. You can take losses and still maintain a good balance in your account. All right. And the prop firms that I spoke about really help you with being profitable by not risking a lot. Because along with, if you want to make a lot of money, you have to risk a lot of money. If you're trying to make $100,000 with a $100,000 account, you have to over leverage that account. All right, that's what a lot of beginner traders don't understand. All right, so that's a part that beginner traders really have to come accustomed to. As a part of mental conditioning, because this game is 90% psychological. So that's it for today. It was a pleasure to introduce the Forex markets to you guys. Once again, my name is Court Currency. Court Currency on YouTube, Instagram, and TikTok. I go live on a daily basis on TikTok, so feel free to follow me if you want to learn more about it. And I have a free Discord where I trade live every day. I give out signals on trades that I'm getting into, and I show you how I'm getting into it, how I'm getting out of it, and that's every single day, well, Monday to Friday, live market open. Okay, it's been a pleasure talking to you guys. I'll see you guys soon. One love.